Hello everyone, very happy to see you all here. My name is Michael Pearl, I'm the COO of Kirobo. So we have just celebrated 13 years since the launch of the Satoshi white paper, and we're about 2 years in since DeFi came to our lives. And crypto has made a very long way from being just a fringe thing for computer geeks to become a real asset class that really can't be ignored. Right? We see crypto everywhere. More and more institutional money is pouring into crypto. We see crypto payments that became a very common thing. And that's definitely a good direction. But having said that, I think we're a very long way from mass adoption. Crypto has still a lot of problems, a lot of hurdles. That crypto is very cumbersome. Not many people know how to use crypto. People need to, educate themselves, and people need to read a lot and make a lot of mistakes before they can actually interact with crypto. More than that, crypto has a lot of problems in terms of risks. People are losing their money due to transfers sent to the wrong address. People are losing their keys. People are losing money due to scams. So I think it's safe to say that crypto has a very long way to go before we can come even close to mass adoption. So the premise of the panel is how to make crypto as simple and secure as online banking. That's what we want to talk about here. Online banking is obviously not the perfect model because it has its problems, but we still trust it and we still use it. And we want to see how we can make crypto much more accessible on our way to mass adoption. So with us, we have an amazing panel of some true OGs of the crypto and the DeFi space. So I will let you guys introduce yourselves. Doug, why don't we start with you?
Sure. So my name is Doug Leonard. I am CEO of HiFi Finance, and we are a fixed rate lending protocol that is planning to launch on the Ethereum network. And we formerly were known as Mainframe. And so we've been through a couple of different iterations within the space over the past 3 or 4 years. So that's a bit about me.
Hi guys, I'm Asaf Naim, Kirobo CEO. I'm in this space since 2013 and established Kirobo in 2018. And that's it.
Great. Oleg?
Yeah, hi, my name is Oleg Ivanov. I'm basically a co-founder of 3 divisions. One of them is called initially Crypto Bazar or CB Capital, where we invest early stage in different projects. We've invested in about 17 projects, 70 since that time, and we continue doing that. I'm very proud to be one of the investors in Kirobo and Mainframe, actually. We also became very active in DeFi space with our Berezka DAO, which is an asset management managed in the form of a DAO with basically the governance and channeling liquidity across different protocols, farming protocols in Ethereum ecosystem, and moving on to Binance Smart Chain. And also we're helping other asset managers to deploy their own DAOs to manage assets across DeFi ecosystem. I have to apologize because I'm actually just jumped out from the conference in Lisbon right now, so that's why the environment here might be a little bit loud, but happy to be here.
Yeah, it's a good chance to remind that a lot of things are going on now in the crypto space, a lot of events. Thankfully, after COVID has kind of declined, so to speak. So me and Asaf are in Lisbon as well, and Oleg is here with us. So guys, so let's start with a question for the entire panel. I want to ask you, what's the most pressing issue that curbs the growth of crypto? We mentioned a few, but I want to hear your idea about what needs to be done. What is the most acute problem that is curbing this growth that we want to see? So Doug, let's start with you.
So the way I think about this problem is 2 major kind of initiatives. One is UI UX. You're never going to get the grandmas and grandpas and older generation into this with the need to manage a seed phrase, private keys, and the inability to reverse a transaction. It's too scary for them. They would rather have a professional do it. And quite honestly, that's what our banking system does. Anytime you try and wire out a large sum of money, you have to go in to the bank, talk to a teller, and then they help do it for you. And that's to help avoid scams. They can, they ask you a lot of questions about where the money's going, and then assist you in it. And then the second is that nobody wants to pay extremely high fees for doing anything, and so we need blockchains that can scale and keep up with demand. Right now, Ethereum is failing all of DeFi because it is such a great idea. It is so popular that it has outpaced its ability to scale and keep up and be manageable. And so we're seeing segmentation within DeFi of people going to Binance Smart Chain, Polygon, Solana, other alternatives because of those high fees.
Good. Oleg?
Yeah, I would definitely agree with what Doug has just said. Of course, the UX UI is far from what the general community is even used to right now with all our phones and all our web pages that we access through our notebooks. But at the same time, what I think we should also add to the basket, not only the security level of all the transactions and the foolproof, let's say, systems where you make a mistake and you're punished for this badly, right? I guess I would not eat the lunch of Asaf. I'm sure he would have a lot to say about this with his solution. But what also I think we have to look at is basically the business application of blockchain, because apparently, if you look historically at where blockchain was used, and it is being used at the moment, starting with Bitcoin as, in a way, a remittance service, like your version of Western Europe, right? For trans-border transfers of your value. Then you had Ethereum with the launch of ICOs, which was basically a version of crowdfunding via this platform, right? Now there is this the launch of DeFi, or basically primitive banking products with exchange of currencies, and then your traditional deposits and lending of your assets within the automated ecosystem, coupled now with NFTs and of course the GameFi, which is a huge thing that is picking up right now, where you have actually a totally different class of people joining the ecosystem, which are not the gamers, but actually the guys who would have a lot of time on their hands and otherwise would be just using this time to flip TikToks or whatever else, and they're now spending this time on playing Axie Infinity or some other things to earn money in crypto. And that's why they have to onboard. They have to learn how to use these interfaces and actually participate actively. So I would say business applications in like big chunks and big verticals that are coming in. This is very, very exciting for us.
Thank you. Asaf?
I think that the major thing here is to not to eliminate the option to make a mistake, but to make human mistake reasonable. For example, today, if you are logged into your bank account, you see on default, you see lost password. Here you can recover the password. So I'm agreed that UI UX is very important, but it's important, but it's not mandatory, meaning you can have your seed or your private key as of now. Also, you can improve that. Obviously, it will be better, but to make it possible that if you lost them, you will not lose access to your money, I think this is crucial. And for example, mistakes that can happen, and a glitch is still happening every day. For example, the other day, I don't know if you guys know, but we, the first product that we launched is the undo button. So if you accidentally send the money to the wrong address, you can retrieve the money back. And someday a guy came to our Telegram group and actually said that he lost 96 Ether that he sent to the wrong address. So I asked him, how you send 96 Ether to the wrong address? It's like 220,000 USD. So this guy said, listen, I monitor this address on DexTool. And the activity that these guys did was very, very appealing to me. So I decided to do the same. I go to my Binance account and then transfer 96 Ether in order to do the same. The problem is that instead of transfer to my address, I actually transfer to the address that I monitor. So imagine this guy sat in the morning and he drank a cup of coffee. And he said, it's a nice day. This is a nice activity. Let's do the same. And suddenly $220,000 gone. This cannot be happen in a functional finance ecosystem. And today, if you made a mistake in the bank, you can call your bank, you can call your teller, and in 99% of the cases, they will give you the money back. And also, I think that the ability to lose the entire assets if you lose access to your wallet, or if someone died, God forbid, so the family is crying on him and on the money, it's unreasonable, and I think this should be solved as soon as possible.
So Asaf, you mentioned the undo button that we all probably know, and you mentioned that there are more products coming up. So I have a question: how, obviously, in your opinion, those products that you're about to launch, if you can reveal something about them, how will they change the crypto ecospace? Will we see a safer, easier to use crypto after you launch those products? And again, if you can share some more details, it would be very good.
Yeah, I cannot share everything, but I will share what I can. So basically, we build an infrastructure that can facilitate backup and inheritance in a decentralized way, and it will become an infrastructure for other products to build on top on our safety net. So, for example, if you provide liquidity and this protocol interact with our protocol, so basically, if you lose access to your wallet, you will not lose access to your assets. Or if someone died, God forbid, so you predefined the exact address that the money needs to transfer to, and it's all decentralized. We never touch the money. It's simply technology that controlled by the blockchain and the community, obviously.
Interesting. Doug, so you're in the business of crypto lending. I wanted to ask you, how can we boost access to crypto loans, both for lenders and borrowers? I know that crypto lending is steaming hot right now, but I'm sure that there are a lot of populations that are unbanked. And I'm sure that on the other side, there are a lot of either high net worth individuals or just plain people that would like to lend money to other people and help them and earn some money on the way. So what do you think needs to change in that respect?
So I think we have to change the form at which we get access to this. So I think we're going to see an emergence of hybrid type organizations which interact with the blockchain on your behalf. And they'll take on the form of neobanks, which are these banks that basically only have a storefront in your iPhone or Android device. And on your smartphone, you'll access them. You'll be able to deposit your crypto and you'll be able to wire in money. And so this is, kind of a specialty space that is going to emerge as the yields in DeFi remain much, much higher than, on Wall Street. And so insofar as this asymmetry exists, there exists an opportunity for entrepreneurs to step up to help onboard, the next group put people into DeFi, and then to they don't have to worry about keys, where they do get the. And so I think we're going to see an emergence of these hybrid type organizations where they're not maxis, where, you know, not your keys, not your crypto. Well, you know, not everybody actually wants to manage their keys, and they do want to have someone hold their hand. It's hard for a lot of us who've been in the space for, you know, the last decade to imagine that somebody would be okay with that. Watching Mount Gox happen, watching, you know, these different hacks, the DAO, you know, they do want an expert who can vet different projects so they minimize their smart contract risk, and leverage asset classes that have recourse. When you look at some of the stable coins that are more centralized, like USDC and Tether, they come with certain benefits. Whenever protocols are hacked, they're able to reach out to those entities at Circle and have them freeze the funds. And so there are trade-offs. There are certain people in this space who are trying to build a fully decentralized, maximalized type future, and we absolutely need those people, but it's not going to be the only way to interface with this opportunity. There's going to be a whole spectrum.
So it's interesting. You're saying that the future of the decentralized finance lays in the centralized tools.
Absolutely. This is something people are already familiar with. One of the hardest things to do is to change consumer behavior. And so you need a form factor, and you're seeing it with things like Square's Cash App, PayPal. You know, they've started taking steps forward in adding crypto as payment options or investment options, and it's very limited in what it can do today. But all of these apps are trying to take on the broader banking industry and be where you park your money. And so the way that they get an edge ahead of banking is they get to these new innovative tools that the younger generation is you know, really excited about, and start building up customer loyalty and offering really good customer service as they evolve their offering in crypto.
Interesting. So Oleg, you mentioned the projects that you guys invested in. You're in the business of investing, and to invest in a project is to somehow try to predict the future, right? To see what are the next trends. So I wanted to ask you, what type of projects, in your point of view, will dominate the crypto sphere in the years to come?
Well, it's a very hard one, of course, because I mean nobody has a crystal ball, right? And it's kind of a it's probably not as bad as your casino, but it's still something that you would try to logically predict in terms of what are the current bottlenecks in the whole ecosystem, what would make sense to actually solve those bottlenecks, and which approaches might actually do that. And then trying to be among the first ones to finance it, or, you know, help with the whole infrastructure that you have with developers and the networks and community and so on. So, and of course, having said all that, our biases, right, and all our background. So that's why some of the things that we see and we invest in does not necessarily mean that we would be right, because there could be some other solutions and directions where we would be not specializing in. So take NFTs, like the art part of the NFTs. So we are totally, like, our team is totally unaware of all this industry or the rules in it, and that's why we cannot be touching it anyway. But the technology of NFT, the stuff that we're using for this as a technology, like allowing pre-coding NFTs in DeFi, like the things that you're using now in Uniswap V3, for example, or in DAO infrastructure. That is very, very exciting and interesting. So to summarize, apparently the trends that everybody is watching at the moment are the GameFi or play to earn, of course, because it's pretty much understandable in terms of what people are trying to do there, the teams are trying to do there with the new types of games that are coming in. So they are pretty much similar games with similar gameplay. It's just the motive is different. So you spend your time not just to sort of receive some affection or just some pleasure, right? but actually to earn money. And that has become a very, well, pretty much a breakthrough with the Axie Infinity and the other games that are coming in with Mythic Quest and so on, especially after the pandemic, when so many people in so many parts of the world actually lost their jobs and were on the brink of financial collapse. And now, especially in this not very well-off countries, of course, this opportunity with pretty much like hundreds of thousands of players right now in Philippines, Indonesia, lots of places in in Africa and Latin America. These people can, spending 3-4 hours a day, they're playing practically. Otherwise, they would be spending this on, I don't know, Angry Birds or just flipping your Facebooks or Instagrams or TikToks or whatever. They're making, I don't know, $200 to $400 to $500 a month, which is like huge amounts of money for them and for the economy as a whole. So, of course, all this thing is one ecosystem with the games, with guilds of players, right, that are providing knowledge and the capital to this ecosystem, and of course the link to the liquidity in DeFi that is definitely going to go there. And these are like the areas that we are personally looking at very, very deeply. And the second thing, of course, is the whole ecosystem of DAO, because we do believe that this first attempts and the current infrastructure is definitely not there with the pretty much understandable verticals, right? So when you have a group of people, usually if you want to coordinate them in this or that activity, then you would need specific tools, and the tools are quite understandable. So you need a group. I mean, you need them. You need a place for them where they can discuss things. You need tools for them where they can initiate votes and process those votes so that everybody would agree what they do. They need a storage for their assets or a treasury where they would manage those treasuries. And they definitely need some dashboards to actually see the traction of how they perform, and their assets, their treasuries, or something else. And that right now is pretty much scattered all across different solutions in blockchain. And there is not a single unified solution for DAOs to move on, not even to, if we don't even cover the legal aspect of it, just in terms of the tools. So that's very, very exciting for us. And at least these two verticals were diving very deep into it.
Interesting. Asaf, let me ask you about the first vertical that Oleg has mentioned, about NFTs. So NFTs are obviously a new thing, and many people refer to them as sort of the way that we look at meme tokens, right? Something is still missing there, something is lacking. What do you think is missing in the infrastructure of NFTs in order for them to become a more serious asset? What needs to change there?
I think the way to trade NFT now is pretty lame. There is only a few infrastructure for that, and it's costly, and you can't even tell if it's like the fake or it can be falsified in very easily. I think the first thing is to trade or to sell the NFT to a specific person. This is very, very important, and this is why we create the peer-to-peer swap with NFT. And second, I think again, if you buy an NFT that costs a lot of money and you hold this in your wallet and you lose access to your wallet, I think it's imagine that this guy that bought the NFT at $59 million, I think of this NFT, how he got it. So obviously this guy will hold it in custodian or something like that. But if you hold NFT 500,000 USD, $1 million dollar USD, and you trade and you want to and you try to sell that and everything, so I think it's this problem has to be addressed.
Okay, Doug, let me ask you from a regulatory standpoint, what needs to change in order for the the soil to be ready for the next step of DeFi? What's keeping DeFi from growing right now from the regulatory standpoint?
On the regulatory front, really, it's just clarity. There's a lot of speculation on these ERC20s tokens, whether or not they're securities. And the really interesting thing is you may end up launching a token that is not constituted as security, but in time, as governance proposals make changes to the smart contracts and update the ecosystem around that token, you can have something that becomes a security. And so there's this very fluid kind of transformation where never have we had an asset class that can shapeshift and move from looking more like debt, or looking more like stock, or other types of securities, a stable coin or a deposit account. We've never had something that can take on potentially any form. And DeFi moves so fast that by the time I think that we get clarity from a regulation standpoint, we will be so far beyond that we will already be in a state that lacks clarity again. It's my belief that individuals will invent new types of money regardless of what type of rules. So if governments come out with rules that kind of block access to this type of innovation, there will be new types of money that meet those rules and are potentially just dumber. And I think this is what gives a lot of credibility to the meme coin meme is the fact that it is safer, at least I'll speak to the perspective of the United States regulatory environment. It is safer to launch something with zero utility that is a joke, something similar to Dogecoin or Shiba Inu, than it is to try and do something that seriously pushes the space forward. There's a lot of safety in it being a joke. This is one reason why I think that we will see much more adoption of NFTs, because the space around understanding art as an asset class is very well defined, very well understood. These things are used as collateral. These things are valued using certain techniques, and I think we will see sort of this culture of crypto take on even more of kind of the NFT form, especially as we get clarity on as to whether or not these assets are securities and what the implications are, and whether or not world governments are willing to acknowledge that we have something distinct that can take on different forms and might need its own class of regulations for itself.
Interesting. Oleg, let me ask you, Ethereum is no longer the king of DeFi, or at least it seems that that may change in the future. And other blockchains are constantly growing and challenging it. We're now at the Solana conference. There's also obviously Polygon and Binance Smart Chain and so on. What in your view is the next infrastructure for DeFi? Will it be Polygon? Maybe Avalanche? What do you think?
Well, to answer it simply, of course, the future of blockchain is multi-chain, right, and cross-chain. So apparently, most of the successful chains will definitely find their place. Speaking like traditional words, either geographically or industry related, right? So they would be like really focused in some specific area. If you look at the industry of web browsers, right? So you have Google as the international leader, of course, but then you have some local large players in different parts of the world for you, China, Korea, Russia, and Russian-speaking countries, and in other parts of the world as well. So in here, our opinion, which I guess, I mean, we definitely might be wrong, would probably be a little, blockchain and DeFi on top of it, of course, would definitely would most likely look like this. So I wouldn't discount Ethereum as platform that has already lost the game, because apparently POS way of consensus is still coming, and let's hope it comes soon, or let's say sooner than later. But definitely just the amount of time and the amount of developers, the amount of problems that this blockchain actually went through to develop, and the in a way bulletproof system, or let's say fault-proof system, compared to other younger blockchains which still have to go through the same steps, is just it has like in a way an unfair advantage in terms of if you compare it to the other chains. And of course the other chains, if you look at them, you see their benefits. There are specific benefits, right? Because if you look at Binance Smart Chain, of course, that's the ecosystem of Binance in the first place, with all its audience, it's all its money, and the marketing sort of machine, right? That helps all the projects that start there to take off faster than on any other chain, right? Polygon, in a way, pretty much the same, because it was the first layer 2 solution, supported by the Binance machine in a way as well. So in terms of all the other chains, it's still a question mark, right? What sort of vertical in terms of business application each of them would be taking? Because there's some blockchains that are saying that they would go into like industrial verticals. There's the other ones that are trying to be the light blockchain, so they could be run on mobile phones with just used for quick snapshot or optimist voting, like ZK Snark sort of way, and so on and so forth. So I would say there's going to be sort of specialization the more we go into this industry. But of course, there's going to be the interrelation of all these chains together with multi-bridges and oracles, and each of the chains trying to pick their own niche to actually dominate it.
Mm-hmm. Very interesting.
I think that Ethereum will remain the major blockchain, and I think that all the blockchain that are EVM, this is the only way to succeed today, because if you build a very easy and nice transaction from Ethereum to EVM, like Binance Smart Chain or whatever, then you can capture a lot of market share. Otherwise, all the companies that already develop, and I run a blockchain company for 3 years now, and there is no such a thing like 2 months or 3 months. Like everything that you build, it's take time. Smart contract, audits, interaction, Web3, interaction with the front end. It's not an easy step. And if someone builds something that is very easy to migrate from Ethereum to the next to other blockchains, so I think this is the way to do. I want to comment of what Doug said about DeFi and I thought, and the US regulation. I totally agree with him, and I want to add that the regulation, for me, instead of embracing the change, trying to fight them, I don't think this is the way, because to be honest, they do a hard time to Uniswap now, but who is running PancakeSwap? so you can create a faceless project that can sell token, can do whatever you want, and it's not going to protect the user more. It's going to no one knows who run this, and people buying, and this is the key point. I think that if the regulation will do a very light regulation that will basically save the user from frauds, and also other concern like MAL, and also KYC. So this is the way to succeed. But again, it has to be very, very light. It has to be very, very simple. And you see today the shift from CeFi to DeFi. So CeFi, it's completely regulated. You have like on Binance and Coinbase, if you want to go in, you need to have KYC, AML, and all that. And on CeFi, on DeFi, you don't have to do it. And I think this is the crucial point here.
Okay, guys, so we have time for one more question for the entire panel. I wanted to ask you, can you identify one occurrence or one trend that, in your point of view, will change the DeFi space in the upcoming future? It can be something that, you know, just happened recently. It can be, you know, a new company that was established. It can be new technology or a new regulatory framework, whatever. One thing that you can identify that will leave the mark for the upcoming years in the DeFi space. So Doug, let's start with you.
Sure. I think people, generally speaking, want to feel smart and secure about where they deploy their capital. Any product or service that helps people feel that is going to be very successful. So that means likely we're going to see the emergence of insurance products that help protect against smart contract or counterparty risk. I think we're going to see protocols that add additional utility or liquidity to existing assets that are high conviction assets that users hold. And that's going to help people feel really smart for having purchased a punk, you know, an NFT 2 years ago, and gives them liquidity on it. And then I think we're going to see aggregating protocols that help you get exposure to the right trade-offs between yield and risk. I think we'll see filters on these aggregating protocols where you can, you know, likely deploy your capital to the highest yield that is insurable rather than just the highest yield. And so broadly speaking, nobody likes to lose money. And psychology says that we have much more of a loss aversion than, you know, the sort of elation that we get when we get, you know, make a bunch of money. And so I think safety and feeling that we're being intelligent about how we deploy our assets and thus additional layers of utility from composable projects and DAOs is where we're headed.
Interesting. Oleg?
Well, I'm a bit skeptical about you know, the way you formulated the question. To be honest, I would say that the biggest thing in DeFi have already happened, and this is really becoming a commodity now. So because, like, if you talk to anybody who's even not touching crypto, quite a lot of people, number one, talk about DeFi. Number two, actually try to do something with it, because you don't have to explain, you know, high yields on your deposits as you do with your bank, right? I mean, with our traditional money, we're sort of used to the situation where we don't hold our money, the bank holds our money, right? And we just have like an interface on our mobile phones where we could see some numbers, and we could shift those numbers from like one account to another account that can give us certain percentage points and whatnot. So in DeFi, it's pretty much the same game. So it is all understandable. Now, most of the innovations, in my opinion, would come in very unnoticeable forms. So practically the trends that we're seeing now is actually forming into three buckets. So one of them being catered to the mass market, and the other one to the institutional investors, and the third is pretty much like in the middle for the blockchain, like true sort of how do you call them, enthusiasts, right? Let's put it this way. So the first bucket would still be serviced by the probably current companies who are already holding their like large number of retail clients. Because imagine if you want to, I mean, it's much easier for Revolut or for I don't know, Tinkoff Bank from our part of the world, and so on and so forth, to actually add an additional product to their current user base, to their current interfaces, to give them a chance to sort of deploy a portion of their money to this instrument that is called DeFi, lending or borrowing, right? Or deposits or whatnot. And then on the back end, just structure it with, I don't know, BVI or Cayman or Delaware entity, where you would have a hedge fund that would be receiving those funds on a settlement basis, like on a daily or like, I don't know, like a weekly basis, and then just help convert those assets into crypto and then channel it to your Uniswap or Compound or Aave. This can be done, as you know, already now. So within the current regulation, right? So it's very easy. So for companies who are trying to well, actually attract all those users from the market with spending like enormous amounts of money on traffic to acquire those users. I don't know. I mean, you have to have like tons of money to compete with those guys. So that's why I'm not very like firm believer in like retail markets for DeFi, because I think it's already, this war is already lost, right? Now the second war, of course, is the institutional guys. For them, you really don't need the dashboards. I mean, it's just about how they control the money, how they structure the whole investment product so that the risk of volatile assets they could be hedging on traditional markets or on futures and options, you know, via different interfaces. So that volume, I don't think we'll be seeing at all. So it's going to be just like playing on the background somewhere, and just as the family office business, right? You don't know how much money is actually managed by the global family offices, regardless of all the reports and so on and so on. But and then the middle sort of size is just these interfaces of players that are trying to do this, you know, play this game, the DeFi game in a way, right? To manage their personal assets, managing their personal keys, and trying to just really advocate and live this life, you know, within this framework that your key, your money. This is a big chunk of people, to be honest. I mean, it's becoming more and more. So for this, of course, you would have more and more solutions, but that would look more like your small and mid-sized business, sort of a groups of companies in traditional world. And for us, again, this is the most exciting part.
Interesting. Last but not least, Asaf, what do you think the current trends that can change the DeFi or crypto space?
I think the shift from CeFi to DeFi is huge. I don't know if people know this, but before DeFi, we actually basically switch from a bank to another bank. Like Coinbase is a bank; it's custodian. Binance, it's a bank. You don't hold your money. So the shift from CeFi to DeFi, it's truly exciting and amazing, because people actually hold the money in their hand. It's come with downsides, like I mentioned, the ability to lose the entire amount, the entire money due to a mistake or something happened to the guy. It's horrible and needs to be addressed. And I think that the next challenge here is to make automatic activities on DeFi. For example, to do arbitrage between two different DeFi exchanges, to make loans, to do all this stuff automatically based on the rules that you set in advance. I cannot reveal too much about our roadmap in this space, but I can say that once we launch our solution, then the version 2 and version 3 will address this problem also, meaning that you can do automatic activities on DeFi that you predefined in advance, and that's it. Stay tuned, so to speak.
Stay tuned. Gentlemen, thank you so much for this fascinating conversation. I had a lot of fun. I hope you had too. And see you next time.
Thank you.
Thanks.
Thanks very much, guys.